With interest rates at record lows, many people are refinancing. But it's not the refinance frenzy we experienced in the run-up prior to the bursting of the real estate bubble. Back then, people were refinancing to buy cars and pay for vacations and pay off credit card debt and so on. While that still goes on to an extent, today's refinancing is usually about reducing mortgage payments or paying off the mortgage quicker. Many have taken advantage of rates in the mid 3% range to trade in what's left on a 30-year mortgage for a more rapidly amortized 15-year loan. This is often a great idea. For example, suppose you have 25 years left on your $350,000 30-year mortgage at 4.5%. Your principal and interest payment is $1,773 and the current balance is about $320. Today, 15-year mortgage rates are as low as 3.3%. So refinancing that $320,000 balance would produce a new payment of $2,256. $483 more a month, but you'd be paying your mortgage off 10 years sooner. You'd also be saving more than $70,000 in interest over what you'd pay if you kept a 30-year loan until it was paid off. For many, there's an alternative to refinancing that produces a similar result. If your lender agrees, paying more than your regularly scheduled house payment can also reduce the term of your loan. While this option is available on most mortgages, I have on rare occasions seen loans that specifically prohibited it. So be sure to check with your lender before beginning. But let's look at that same situation again. Rather than refinance the $320,000 mortgage for 15 years, let's just start adding an additional $483 to the monthly payment. The loan will be paid off 8 years and 2 months early. Not quite the 10 years refinancing would have produced, but still very good. Interest savings would still be in the $70,000 plus range. The benefit of adding to your payment, rather than refinancing, is that you have no closing costs associated with a new loan. Also, that additional $483 you're adding to your payment, it's your option. If you have a period where you need that money for something else, you don't have to send it in. You don't have that luxury if you refinance. Your mortgage is an important aspect of your financial life, one that needs to be managed for optimal benefit. If you're considering a refinance or just curious about what your options are, we at Help You Sell Conejo Valley would be happy to go over them with you. Help You Sell Conejo Valley is a progressive full-service real estate company saving buyers and sellers thousands in Westlake Village, Thousand Oaks, Oak Park, Camarillo, Oxnard, Simi Valley, Los Angeles, and all of the Conejo Valley.